Hello and welcome. I am Gimba Umar. Tonight, Monetary Policy Committee ends its two-day meeting in Abuja, raises interest rates from 12 to 14%. President Muhammadu Buhari flags off the Abuja-Kaduna rail services, promises to link more cities in the country by rail to fast-track economic development. Tribunal upholds the election of Siraki Dixon as the governor of Bayelsa State. And at least 13 people killed as suicide bombers target African Union peacekeeping base in the Somali capital, Mogadishu.
On Business News tonight, Central Bank affirms positive rating on Nigerian banks.
And sports news, Chelsea midfielder John Mikelobi leads Team Nigeria to next month's Olympic Games in Rio.
Gloria Umezuki, and from Abuja, governors of the All Progressives Congress reaffirmed their support for the president in his fight against corruption and insurgency.
We'll begin tonight in Abuja, where the central bank governor, Mr. Godwin Emefiele, today announced an increase in the lending rate from 12 to 14%. Speaking at a news conference at the end of a two-day meeting of the MPC, central bank governor, Mr. Godwin Emefiele, gave reasons for increasing interest rates on the heels of inflation and a weak macroeconomic environment. Mr. Emefiele suggested a coordinated action for budget implementation and a sustained fiscal policy to stimulate economic activities.
Members of the Monetary Policy Committee at a meeting to intimate Nigerians on the state of the economy. First, the central bank governor gives a rundown of economic trends in the international community, as well as the domestic outlook. On the local scene, he says there's been a rise in the nation's inflation rate to about 16.5%, which is largely driven by high transportation costs, low industrial activities, and increase in food prices.
The Nigerian economy is still saddled with effects of the shocks of the first quarter of 2016, which led to a contraction in output arising from energy shortages, high electricity tariff, price hikes, scarcity of foreign exchange, and depressed consumer demand, among others. Whereas the influence and persistence of some of the factors waned in the second quarter, it is unlikely that the economy rebounded strongly in the second quarter as setbacks in the energy sector continued, owing mainly to vandalism of oil installations.
He then gives some of the considerations and suggestions of the Monetary Policy Committee before reading out its key decisions.
The MPC was further concerned that while the situation called for obvious tightening of the monetary policy stance, the recession confronting the economy and the prospects of negative growth to year-end needed to be factored into the policy parameters.
The Monetary Policy Committee says it is also worried about the non-payment of workers' salaries across the country as it has affected growth processes and reduced aggregate demand. While it also expects the full implementation of the 2016 budget to spur economic activities, the MPC notes that further tightening of the lending rate will solve most economic challenges Nigerians have had to endure.
Well, we have here in our studio an economist and chief executive of financial derivatives company, Mr. Bismarck Rawani, to analyze the outcome of the MPC meeting. I want to thank you so much indeed for coming on the news at 10. Quite a number of predictions and projections, of course, were made concerning the outcome of the MPC meeting by the CBN governor, Godwin Emefiele himself. Did it come to you as a surprise, though, when you heard the outcome of this meeting?
Yes, we expected, the economists generally expected a status quo outcome. Because no matter what decisions, you're going to be caught, you're actually caught between a rock and a hard place. Every outcome had some negative consequences. So it was a question of which is the least of all evils. So what was the purpose? The purpose, this was a tactical response to a much more structural and fundamental problem. Because once there's persistent rise in inflation to 16.5%, the dollar inflow was stymied, there was external reserve accretion. Actually, we saw external reserve depletion to below $26 billion. It was also meant to stimulate national savings and also reduce regulatory arbitrage, by which I mean that people were borrowing from the central bank at 14% and lending to the federal government of Nigeria at 17 and 18%, making money for doing nothing. So what are the benefits of this move? The benefits of this move is that it will lead to short-term Naira appreciation, which is good. The Naira is already within its real equilibrium path, 20-year path, which is about 315 to 320, but it will appreciate. It already appreciated today from 378 to 376 in the parallel market. There will be reduced demand for dollars because people are going to pay more for the money they borrow. And also, there will be reduced cost of imported raw materials. However, the spread between the parallel market and the official market has actually reduced from 80% to 20%. This means that, so to some extent, the supply shocks that are created may be mitigated because of increased availability of imported goods. Now, but you see, inflation in Nigeria as a result of supply shocks will not respond to high interest rates. And what are the negatives? These are limited policy options with hard choices. Higher cost of borrowing, a peril to small and medium-scale enterprises. Those guys are going to be under a lot of pressure. Increased corporate failures and bankruptcies. Higher non-performing loans in the banking system, and a threat to the stability of the banking system, even though we're told that the banks are safe and sound, but it will just make sure that it will ensure that their profitability declines a bit.
So this, in other words, is a bad move by the Central Bank of Nigeria, is that what you say?
No matter what move they make, this was a hard choice between a rock and a hard place. You are confronted with a recession and high inflation. Typically, because the fundamental problem is contraction in economic activity, you can either hold and wait it out, or basically you allow for the economic activity to allow the stimulus package, fiscal stimulus package, to increase the level of economic activity. Some argue that by increasing interest rates you can strangulate the economy, because basically if monetary conditions are tight, monetary policy should be loose. In Europe and in the United States, when you had the deep recession, you actually reduced interest rates. You created quantitative easing to what we call an accommodative stance. However, because this economy is probably in premature stages of development, that's a difficult call. Again, the decision is that what I think will happen is that the increased cost of borrowing may be mitigated by the reduced, that is the appreciation of the Naira. So if, for example, my borrowing cost increases by 3%, while the Naira appreciates by about 5%, you'll find that net-net, my financing charges and but what is actually required now is restoration of confidence. There's no decision that you will make that will not bring more pain before gain. So what is the outlook? The outlook is that, and if you look at, first of all, let's look at our African peers. Angola and Ghana have high inflation rates, but they enjoyed positive growth. Ghana is going at 4.9, Angola is going at 4.1, even though the high inflation rates are there and high interest rates. Nigeria is having negative growth. The answer to negative growth is to be accommodative and allow for a stimulus to act first. Short-term moves, which are tactical, do not address the fundamental structural problems. So what is going to happen? The Naira will appreciate, the SORA started appreciating, good. The BTC rates will appreciate also, it started to West 370. The gains will depend on oil production. If oil production drops, then we have a problem. But more than anything, we need market transparency and liquidity. The market has to be transparent. There's no question. You can't play games with the market. The market sees through you very quickly. Tactical moves do not solve structural problems. Only consistency, time, and patience will allow us to get out of this.
Let's break this down and bring it down to the basis of it. How does this affect the woman in the market, for example, who is selling tomatoes?
Two ways. One, if inflation comes down, the prices come down. But the prices are going to come down because output increases or because demand reduces. What could happen? The danger of what the move is that if people are laid off because of high interest rates, then the people buying your goods will drop and you probably go out of business. However, if because raw materials come in because of the foreign exchange availability and productivity increases, more people get to work, then demand increases. Every supply creates its own demand. That's what they call sales law. That will create. So whichever way you look at it, there was no easy option. This was a classical case of the monetary policy dilemma choosing between rate growth and inflation. Where we are, basically, I thought that staying where you are, status quo, and observing the trend for some time could have been an option. However, that's the call of the... Don't forget, it's a committee that made the decision. So they must have weighed all the data before them. Some of it we do not know. So there we are.
So we're looking at which of the sectors of the economy now are in direct line of fire. Is it the oil and gas sector?
No. Oil and gas we produce, the cost of production is pretty much fixed. Everything, those things are out of our control. The demand for oil is determined by OPEC and other forces. But what is required is the investment in infrastructure. One major problem of this move is that it increases the cost of borrowing by the government. The government already has a deficit, and if you increase the MPR is the base, so you find that all the state governments have their bonds priced above the MPR.
Mr. Basis Makurwani, I want to thank you so much indeed for giving us a clear-cut analysis about the MPC's meeting's outcome. And thank you so much indeed for coming on the news at 10. It appears the controversy over the budget padding allegations may not end anytime soon, as the House has challenged Representatives Abdul Mumin Jibrin to present credible and authentic documents to back up his claims against the principal officers in the House. Addressing journalists in the National Assembly, the chairman of the House Committee on Media, Representative Abdul Razak Namdas, says that the lawmaker has, by his actions, gone ahead to confirm why he was relieved of his position. Our correspondent, Darul Asisi, has this report.
When the House of Representatives adjourned plenary on Thursday for their annual recess, no one had any idea of what was to follow. Since then, the former chairman of the House Committee on Appropriation has demanded that the Speaker and the Deputy Speaker of the House resign, and he has also made several allegations against them. The spokesman of the House has now come out to address some of the allegations made by the former chairman. He started by giving reasons why the lawmaker was removed as committee chairman.
His removal was based on sundry acts of misconduct, incompetence, total disregard for his colleagues, and abuse of the budgetary process, among others.
He also challenged the former chairman to provide facts to back his allegations against the Speaker.
Our counsel to Honorable Abdul Mumin is for him to be real, as a man, by bringing up credible, authentic, and verifiable documents or stubborn facts which disclose the commission of crime on the part of any member or leader of the House.
And to the allegations of budget padding, the House spokesman had this to say.
When, therefore, the National Assembly appropriates funds in the budget, it can never, under any circumstance or guise, be deemed as regarded as tinkering or padding. The legislature is therefore constitutionally incapable of padding the budget.
The House says the whole saga is an internal matter, and in accordance with its rules, the House Committee on Ethics and Privileges will investigate the allegations made by Representative Abdul Mumin Jibrin. Lanre Lasese, Channels Television News.
In part 2, after the break, Appeal Court in Abuja reserves judgment in the Kogi State governorship tussle. That's coming up in a moment. Stay with us.